Give me 1 second, guys. I'm just trying to share my screen. I'm so sorry about this. Welcome, everyone. Okay, here we go. Okay, okay, everyone. Welcome to our webinar series. My name is Anam Umar. I'm sorry, it's renamed as Brian Alfaro here. That's he's head of investor relations. It's his account that I'm talking to you all from, and I just I'm finding it a little bit hard to rename it. But thank you all for taking out our time this evening to attend this webinar series. Um, Again, my name is Anna Umar, and I'm co-founder and director of business development at Hedwig Capital. The topic for today's webinar series is Real Estate Investing 101 for healthcare providers, healthcare professionals, as well as high-income professionals. Like possibly, I know that I see a couple of people here who are not in healthcare, but again, this webinar is for you as well. This is our number. This is a number that you can, text if you want slides to this presentation. So just text us on 281-559-7061. If you have any questions, if you want slides, if you want to get in touch with us, please text us here. Again, just going over disclaimer, this webinar is for education purposes only and should not be considered as a legal or accounting or investment advice. The information in this webinar series does not represent an offer to sell or solicitation of an offer to purchase an investment or securities. And we advise you all to consult with your own attorneys, financial advisors, and CPAs for legal matters, for investments, and for specific tax-related questions. Now, a little bit about us, about Hedwig Capital. Hedwig Capital, it was designed, essentially, we was founded back in 2017 by my husband, Sid Shamim, and myself, with the sole purpose to have a platform to actually build, invest, and build our own wealth at that time. Of course, the real estate market was different back then. It is different now. And, our goal was to provide an investment platform for us and eventually investment opportunities, which we extended it to, of course, our investors now. Our goal is to provide investment opportunities that give you the freedom to do what matters to you the most. It allows you to sort of liberate you from the pressure of having a full-time job, from essentially from just the ability for you to buy time for yourself. Going over our core team, so we have Sid Shamim here, who's the founder and CEO of Hedwig Capital. A little bit about him: he has many years of experience with doing real estate, be it commercial, residential, and now primarily multifamily. Sid was doing residential real estate for many years. Almost had a portfolio of 30 plus single family houses before he kind of we founded Hedwig Capital and started doing multifamily real estate. And then it's me. My name is Anna Kumar again. I am a co-founder and director of business development here. I'm also full-time full-time gastroenterologist. So as a physician myself, I do understand the limitations that other physicians have. I do sympathize with other physicians who are struggling to find good, reliable investment opportunities. Because essentially, I think I understand. I come from very similar sort of mindset, and I've evolved over the years, and I would like to help you to evolve as well. So that's kind of where I'm at. I usually, a lot of my work with Hedwig Capital is to help other physicians find the right investment opportunity for themselves, and how they can become a part of Hedwig Capital family, and the best opportunities that is suitable for their personal preference, that we can provide them. We have Brian Alfaro here, who is the director of investor relations. Brian again has many years of single residential and multifamily real estate experience as well. He similarly was doing residential single family, operating single family houses before he kind of jumped in to multifamily real estate, was working with partnering with a different um, uh, sort of investment company before he joined Healthcare Capital. And we're very, very lucky to have him. He is a fund of knowledge, and usually he is Brian is at the point of contact for most of our newer investors. He would go over your initial introductory call, see if you're a suitable fit for us and if we are a suitable fit for you as well. We have Omar Naqvi. He is our Chief Financial Investment Officer. He's the point of contact for our investors, actually. He's the one who would answer any questions relating to your current investment, sort of work with you regarding your financials, and all investment specific questions once you are a part of Headway Capital, once you do invest with us. So this is the core team, and of course uh, we have family of our staff who and management department who really put their heart and soul into Hedwig Capital. We're very fortunate to have them on. Now a little bit about Hedwig Capital's track record. We have upwards of these. This is a little bit of an older slide. I made it when we started doing these webinar series, but we have upwards of 539 million plus assets under management, over 3,500 units under management as well. We over the past years, we have provided an average annual return for long-term investments of about 25 to 30%. So this is not the return per year, but this is the average return after your after the final sale of your long-term investment with us, when the final sale happens. So that's we have an average a track record of providing an average annual return of about 25 to 30% on your investment. We have about 500 active and passive investors now who continue to invest with us, and we are very fortunate to have them as well be a part of our team. So a little bit about how we have how Hedwig Capital has been successful. We are very fortunate to, of course, really have a really good team of people who have been with us for years now. I think consistency with our core team has really helped us to accelerate over the years. I think the secret sauce for Hedwig Capital has been that we've just been, from the very beginning, we've been very focused. My husband, I can speak for him particularly, like he has a very eagle-eye vision almost. When he really focuses on something, he just makes sure that it's perfected. So he's and that's the same with all our members. I think we sort of cover each other for our weaknesses and really help with and help with us with our things that we do well. So I think that's been I would say that's been the main sort of a success factor of Hedwig Capital, that we've been focused, we're very purposeful, our team is very disciplined, and we've been very consistent with our results. So our investors have continuously, I think the 500 investors we have, most of them have invested into multiple assets with us, and that is because we have provided them consistent returns, and I think our track record speaks for ourselves. So I'm very excited about our topic today. So we're going to jump right in because I think people will have some questions as well. And this is a little bit of a lengthy conversation compared to our previous webinars. So first and foremost, why would you like to invest into real estate? I get this question asked a lot. And the reason being is because I think as a healthcare professional yourself, A lot of and healthcare professionals around you. I think a lot of people are just routinely used to investing into, their own. Of course, we do encourage that, investing into 401ks, maximize that. Other retirement funds that are being offered by your employer. People usually have multiple IRAs, Roth IRA, backdoor IRAs. We encourage those as well, of course. We have talked about them during our previous webinar series. But in addition to that, a lot of people are just used to investing into the stock market. As physicians, you of course have, depending on what kind of practice you have the opportunity to invest into your surgical center or your own office building, so on and so forth. But investing into real estate allows financial diversification, and you want to diversify. You never want to put all your eggs in one basket. And I think the goal, eventually, what leads to financial independence is diversification. I think the market is constantly changing, and stock market, for instance, is volatile. It's exposed to market volatility. One day you may make a lot, and the other day stock market may crash. So I think investing into an entirely uncorrelated sort of venue allows you to not lose it all one day. So I think from that perspective, real estate has been, there have been ups and downs, but it's a very consistent sort of it provides very consistent. It has provided very consistent returns despite changes that have happened over the years in real estate market. Real estate provides passive income sources, and you want that. You want cash flow. And real estate is an excellent source. Your asset, whichever asset you invest into, it appreciates on its own as well. But in addition to that, it allows you to have passive income. For instance, just giving you a simple example, most of you already must have been doing some sort of like single family or residential real estate opportunity. When you buy real estate and you put it on rent, for instance, you are paying the mortgage, but in addition, you are getting rental income, which is usually higher than mortgage or the expenses on the property. So you are getting some passive cash flow from there. In addition to that, your asset itself is appreciated over the years. So I think that passive cash flow opportunity, passive income source is pretty sweet. Additionally, there's a potential of high returns and equity growth. It just depends on what kind of real estate you're investing in. Some provide significantly high returns, and there is a significant opportunity of equity growth depending on where that asset is brought, what kind of market you capture, or a lot of times you just get lucky with it as well. Real estate does have that kind of potential as well. And I think the biggest thing that, as a healthcare professional yourself falling into a very high income bracket, you do get significant tax advantages. Now, everybody's personal situation is different. I know of some providers who are able to themselves or their partners can get real estate professional status, which definitely allows you to get the most out of your most sort of tax advantage through real estate. But depending on your personal sort of situation, I think discussing tax advantages of investing into real estate should be on a high priority for you, because you are ending up paying a lot of taxes just because of you falling into a high income bracket. And you definitely want to offset that. So what are the different types of real estate investments? The first is residential real estate. Of course, this is the most sort of risk-averse real estate investment opportunity and a lot of people start off with that, and we understand it, which would be buying a single-family home, which is different. Of course, it's not your primary residence. Having another single-family home or a condo, or just sort of buying a small apartment. Many people do Airbnbs and get some business out of it. Of course, doing short-term rentals such as Airbnbs allows you to offset your taxable income more. That is um, that is something that we have discussed in the past in our previous webinars as well. But you know that those are the kind of things that I think a lot of people feel comfortable starting off with. Now, a lot of my colleagues have or do discuss starting off with residential real estate, and I do encourage. I mean, I'm not opposed to it. I think it's you have to start somewhere, and if people feel that that is a comfortable sort of place for them to start off with, I think just going in and at least starting off with something is better than nothing. And a lot of healthcare professionals speak, you know, the amount of work we do. On average, you know, if you would see the the stats, it's an average physician or an average healthcare provider works about 56 hours a week, which is a lot. I know of people who work as much as 100 plus hours a week, which is a lot. So, you know, with working this much and also maintaining your own personal life, you may not have enough time to think about investments. And at the back of your mind, you should always be thinking the more you're working, the more taxes you're paying. So, you know, ultimately it's not about how much you're bringing in, and maybe all that hard work that you are putting in is not generating you the kind of income that you wish to, or you for how much you should be fairly be compensated for, considering all the extra work that you may be doing. So anyways, going more into it, residential real estate is sort of, I think a comfortable spot where most people find a comfortable spot to start off with. Commercial real estate would be buying, you know, investing into, for instance, a strip or, you know, uh, car washes. Like we have a car wash portfolio that we closed last year, so a lot of investors that invested into that, so that would be considered commercial as well. Through commercial or office buildings, surgical center sites, so on and so forth. And then multifamily real estate, which is what we have most experience with as Hedwig Capital, because we've been doing multifamily real estate for many, many years. We just have a ton of experience. We do encourage people to actually even start investing with multifamily real estate, because that's the kind of mistake we did. We started residential and just had a very, very slow pace till we actually made our big leap and gone into multifamily real estate. And you would realize that you really get the most out of your investment when you invest into bigger projects than just doing a smaller scale residential investment. And you ultimately would be investing the same amount of money, but investing into multifamily really helps. Now, I do want to use this opportunity to help you all understand a little bit difference between multifamily and residential real estate. Now, multifamily real estate, of course, it's going to be a bigger project, 100 plus. Usually, most of our apartment complex are like 200, 150, 200 plus units. So you realize with having a bigger project, your risk is being divided amongst more people than yourself. When you're doing residential real estate, that's, you know, it's, you may do it by yourself or with one or two partners if you're buying, for instance, a 3 condo portfolio or something of that sort. But that's the kind of risk that you're just sharing amongst yourselves. But in multifamily, there are going to be more investors that are going to be involved. Additionally, with the bigger size of the asset, you're able to get a better management team. You're able to get better insurances. You're gonna get the asset appreciates way more. You're gonna get higher returns at the end of final sale, because you're building really, really solid equity. In addition to that, your cash flow is higher with investing into multifamily. And then you also don't have to worry about funds in a residential investment. For instance, if your single family home is not on rent for 2 or 3 months, it almost offsets you for the whole year, for your earning for the whole year. However, in multifamily, if there are 1 or 2 vacancies or a couple of more, that doesn't really hamper your overall cash flow from that asset. We'll talk a little bit more about it in our later slides as well. Understanding a little bit about active versus passive investing. Active investment would be an investment where would be giving a lot of your own time. You'll be managing, you'll be investing time. Additionally, you'll be taking risk. You'll be investing your own equity. And most importantly, I think it's the problem with active investment would be the amount of time you would put into it. A lot of healthcare professionals, I think the challenge for them is that our professional makes us very risk averse, and a lot of us want to do active investment. I think that delays of the wish to do active investment actually delays you from doing anything at all. So I know of people who've been thinking about investing to real estate for 5 or 6 years, but just because of our nature, and I do understand that, like as a healthcare provider, you're very risk averse. Your profession teaches you, it's built into us. So they're just not comfortable with giving their money to you're not giving your money ever, but investing or trusting somebody else who's managing their money, and they would rather buy that asset themselves and manage it themselves. It is very, very challenging to start off with doing the whole process by yourself in today's market. I think starting off with passive investing is at least, even if you want to eventually do active investment, which is okay, but starting off with passive investment is a very good space to start. As long as you find a good company or a good platform that you find people that you actually trust, and you see their track record, you're like, okay, these are the kind of people I do want to work with. I do trust them. They have good track record, and this is the kind of culture that I would want to be a part of. I think doing passive investing, you just essentially invest your money after doing your own personal due diligence and making sure that that asset is something you want to invest into. But beyond that, that doesn't require you to invest any more time than just reviewing bi-weekly or every 4 weeks, reviewing the financials, making sure that your distributions are appropriately being sent to you. You'll get your yearly tax forms, making sure those are submitted. Anything more than that is not time consuming. Somebody else is investing that time for you. So I think passive investing is a very good space to start. And actually, I think if you would wish to choose to just stay passive, I think that's actually preferable as well, because in that way, you would be able to focus on your own job and passively invest into real estate. What are the benefits of investing into real estate? We did talk about it a little bit before, but it's essentially cash flow. So you are getting your cash flow. You are getting money every month. We usually send in Henry Capital, we send quarterly distributions, but you are getting money that you are not working for. Your investment or your own money is generating money for you, and it's pretty sweet getting that money every 4 months and not having to work for it. In addition to that, you're building equity. So your real estate is growing and appreciating with time. As I discussed, Henry Capital does have a track record of an average return of 25 to 30% at the end of final sale of your investment. And these investments could be, the final sale would happen at 3 years, 4 years, or 5 years, depending on how the asset class is doing. And that's a substantial return that you get on your initial investment. And most importantly, there is the power of leverage in real estate. People don't understand that. I think the way that I would explain the power of leverage in real estate would be that, for instance, if you go out today to buy a car for yourself, whichever company you're going to finance your car from is going to run your credit history and see if you will be able to make payments on your car. Real estate, particularly commercial multifamily real estate does not work like that. Real estate, you know, um, companies that give you loans actually give you loan based on the net operating income of your real estate. They don't base it on the person taking the loan, but actually the asset for which the loan is being taken for. If they feel that this asset is outperforming, it's generating really good income, you're able to get substantial, you're able to leverage substantially based on that loan, which is, and this is very different. You are able to get a significant amount of loan to invest, and you don't have to put all your cash into that asset. I think the power of leverage in real estate is pretty sweet. I think it's not realized how much there is to it, but definitely something to really strongly think about. So why should you invest into multifamily properties? Benefits would be scale and efficiency. Bigger the size, the more money you have to get better management, get good staff, make sure your systems and processes are efficient and they're functioning. And essentially, what you're doing and how much cash flow you're generating is essentially operator dependent. So whatever, if you have a good operator or you're having the asset is being managed by an experienced company, they would be able to make sure that all the money is being basically maximum efficiency is being generated from the property, and you're essentially reducing expenses and generating more income. There is risk mitigation through diversification. As I said, you're not the one taking the risk yourself. There are multiple people sharing risk with you. So I think the risk is sharing the risk in a big multifamily asset definitely helps. There is it's a consistent revenue stream. People need houses to live in. They're always going to be renters. As long as your asset is in the right location, it's close to a work, close to jobs, it's around good schools, you're always going to have renters. And then you can really boost or increase the rents irrespective of the market, and your rents are essentially depend on what quality of a living experience you are providing your renters, and they will pay for it. And of course, there is significant tax benefits from getting depreciation, which again would be something that you would discuss with your own CPA, but definitely tax benefits are something that we should strongly look into. So what does it mean to be a passive investor? We discussed active versus passive investors. An active investor invest their own time. They're the one managing operations. They're the one looking over everything. Versus a passive investor, you would be, after you do your due diligence, you will be giving your money, and then essentially you will be getting financials, and then you'll be reviewing them. You'll be getting your quarterly distributions. You'll be getting your tax forms, and then you'll be getting your extra. You're essentially the payout at the end of the final sales. As a passive investor, you're not dealing with any tenants, you're not dealing with any vacancies, you're not managing any staff, you're not the one responsible for fixing things or things that break. And then you essentially reap the benefits of not investing time, but at the same time getting the returns on your investment. Your expectation as a passive investor would be to get your financials, to get your monthly update email about how your asset is doing, what are the problems, how those problems are being addressed, and if there are no problems, what is the plan for that asset for the future. And then you should expect your annual tax form for depreciation so you can improve tax benefit of it. Now, due diligence is the key. I know it's hard to actually start off, and a lot of people don't know where to start off from. The way that we also started off from somewhere. I mean, we weren't actively managing real estate from the very beginning. We have been, and we still are passive investors into invest with multiple other people. And I think, starting off, you may not have be able to get all the knowledge. It takes months, years to actually get enough knowledge to feel comfortable with knowing, uh, knowing uh, each and every number or how things work. And I think ultimately the key is to find people that you trust and looking into track record. Once a company's track record is good, they haven't had any fallouts, they have good reputation, you can actually go. It's real estate investing is a hard asset. You can actually physically um, go to one of the assets and see how the asset is performing, talk to the renters there and see how, if they enjoy the living experience. That really allows you to get security and feel secure, and kind of start off with, that would be, if you feel that, this company is, or this platform is gonna really get you the maximum out of your capital investment. I think that's where you have to go. But that being said, ultimately there is a risk that you're taking. So some amount of knowledge of how to do the due diligence is the key, and you should be able to actually kind of understand a little bit about how to vet deals and find the right operators. Now, how do you spot a great investment opportunity? Now, when you do get an asset, an email that this asset is up for purchase and it's up for an investment opportunity, I think things that you have to look for are, while doing your own analysis or understanding, and we already do it. So at Hedwig Capital, we are very, very strict about the location that our assets are in, because um, the type of job growth that's in the surrounding localities, because we make sure that all our assets are um, close to where people work, so that it's a convenient space for for jobs. And the population growth, there should be population growth around and good schools in the area, that really allows for you to get better tenants. And as a passive investor too, when you get sort of an you get notified of an asset up for investment, you should look for the location and for the general locality around it, and make sure that there is growth in that market. For financial metrics, you should look at average return. Now, this is was based on the company's reputation and what kind of average return they have provided over your operators, what kind of average return they have provided over the years, and what kind of average return they're promising, what kind of equity growth is being expected, and what is the cash on cash return. Understanding cash on cash is really important, because cash on cash is not the net operating income of your asset. It's actually the net operating income minus the expenses. So you have to make sure that your expenses are being deducted, and then you divide that net operating income minus expenses, divide that with your initial investment, how much investment you've made, and that gives you the cash on cash return. Now, this is an easy way for somebody to really see if an investment is even worth looking into. And sometimes, some investment opportunity assets are actually being undervalued, like they have a low cash on cash return, and it should be higher because they're just not generating enough income, because their for instance, their rent is really low. Now, that does allow an asset to appreciate significantly when you actually put the right processes in place, and you make sure that the rent is up to par, or whatever should be fair for the kind of quality of living experience you are providing the renters. There is value add potential. The better you do with the property, the more you'll get out of it. building a pool, a dog park, um, uh, a playground for kids. Now that all adds value. It's changing your countertops, adding your cabinets, having stainless steel appliances. Every single thing adds on value to your asset. And again, ultimately depends on your operators of how invested they are into getting the maximum out of that deal. Um, and then, of course, you have to do your own due diligence. You have to look at numbers and make sure that it all makes sense to you before you invest. Partnering with the right operators is the most important thing. Like ultimately, I think when you start off or if you're already doing it, it's very hard to just you know just get all the knowledge before you start off. So a lot of times you have to trust the operator. I think attending, webinars like you're attending right now, which is of course for Headway Capital, but you can attend. You should, meet more people, go visit their assets, see how they're being managed, what their track record is, talk to other investors, and if you trust the operator, you should go with them. And most something that I didn't forgot to actually mention, you should make sure that they have a lot of experience in the business and a lot of experience with the asset class that's being offered to you. Of course, asset class management, a person who's been managing an A-class property or who has multiple assets and multiple A-class assets would have a very hard time managing a B or C class asset because their issues or problems are entirely different. So you should make sure that your operator has experience with managing the asset class that has been that is being offered to you and that you're thinking of investing in. So talking a little bit about passive investment opportunities with Headway Capital. So our most experience that we have is with multifamily apartments. That's every time an investment opportunity opens up, we do notify our current investors as well as new investors. We do want to have new investors be a part of our group as well. But again, when an asset is, we do notify people of an asset out in the market. This really gets our spots get filled very, very fast. So I do advise newer investors to understand that this can be a time sensitive game, because people who have been investing with us for years may sometimes be very aggressive to continue to invest with us as well. So we have, first and foremost, would be the multifamily apartment class that we offer, investment opportunities that we offer at Headway Capital. Headway Capital also has a real estate income fund, which is actually very sweet, another very sweet space to start for healthcare professionals if you haven't invested, or even if you want to invest in future. This is way better than keeping your money in the bank account. So in real estate investment fund is, I think there is a minimum fund requirement of 50,000, but you invest that kind of money, and it may be, of course, that's variable. We can discuss that with you. But you, instead of putting that money in your bank account, you put that money in our real estate investment fund, and you get a fixed return of about 8% a year. Now that fixed return is promised, or you get that return irrespective of how much money that you're investing. And this is essentially liquid cash with any which and you can pull out your investment with essentially a 3-month notice. So as long as you notify us 3 months in advance that you want to put your 50K or 100K or whatever amount of investment that you want to have invested into the fund, you want to pull it out, you can. Now, this definitely allows you to get higher returns than you would get if your money is sitting in the bank account, or if there is no deal happening and you're like, okay, I'm expected to have a higher bonus and I want to put it or secure it somewhere. This is a very good space to put in. So definitely look into our real estate investment fund to invest money into. And last but not least, this is a newer project that Headway Capital had, was for car washes. It was very, very successful. We closed a portfolio last year, which was car washes. The business as well as the real estate. So that was pretty sweet. It's doing very, very well, and we're looking for more car wash opportunities. And just stay tuned. More will come in. Now, if you're interested in joining Hidbay Capital or joining or getting notified regarding our investment opportunities, you need to join our private investor club. We only notify people who are in our private investor club about newer assets. Of course, you do get emails regarding any webinars or information, so on and so forth, even if you're not in the investor club. But people who are in the private investor club only get notified about the asset investment opportunities that Hidbay Capital does offer. And when a new one comes in, it is very time sensitive. So you should definitely, if you are interested in investing with us, you should join our investor club. How you can join our investor club? You have to submit an online application. You need to complete a qualification call. Usually that's done by Brian Alfaro. And he makes sure that we're the right fit for you and you're the right fit for us. And you have to be an accredited investor, which means that you should either have a 1 million net worth, not including your primary residence, or 200K plus single income, or 300K plus income as a married couple. What are the advantages of joining the investor club? By joining the investor club, you have access to member-only in-person events. So Hidbay Capital hosts every 2 weeks, sometimes every week, in-person events in which you were able to meet us, talk to us. We take you to our assets, and then you can tour, talk to other renters, see the management, and see how things work. Now, because it's real estate is a hard asset, you can actually see how things work, and actually know where your investment is going, or where your potential investment in what kind of team is going to be operating it, and that definitely helps you get a lot of security. We have member-only investor property tours. You get access to our online real estate educational webinars, and our passive investment opportunities are exclusive to private investor club. So just make note of that. You will not be notified if you're not part of our private investor club. Again, this is the QR code where you can scan, and it will lead you to the application link where you can join to become part of our investor club. A little bit more to learn about our private fund, our income fund offering. You can scan this, and it will tell you a little bit more about our income fund if that's something you're interested in investing in. Again, this is the number 281-559-7061. If you would like slides, please go ahead and text me, and we'll send them your way. Thank you. So this is just our website link, if you would like that. I'm open to questions if anybody wants to ask any questions now. Okay, our first question is, could you tell us about an asset, a successful asset that Hidbay Capital has had experience with? Okay, so a successful asset, all of our assets are fortunately touch wood, mostly doing really well. I think if I had to speak for a successful asset, I think I would just give you an example about one of the assets. Actually, we haven't sold it. We've still kept it as a long-term investment because it's actually doing so well, and it's appreciated, has significantly keeps appreciating every year. And but it was something that we, one of our apartment complexes that we bought back in 2019. It's a 248 apartment portfolio. We bought it at 62 a door, and I think now it's about 140 a door and growing. So it's significantly, we have already refied it once and given people their initial investment back. And still they have equity in their in the properties in the assets still. So they're expected to have significant returns when the final sale happens. But you know the investment the asset is doing so well. It's always um, you know nearly 100% occupied. It has really good cash flow. So that really is something that I think I feel that very proud of. The feel has really well. Okay. Any further questions? Okay, I have another question come up. What steps does Headway Capital take to ensure financial health of their asset? Um, I'm not sure if I understand this or may not be able to answer it, but at Headway Capital, I think we're financial health. So, our asset, um, I think we're constantly going over financials. I think we're very particular about making sure, number one, that occupancy. So I think we're very focused on it. We want to make sure that there is a quick turnover. The apartments are get ready so quickly for the next renter. If they're vacant apartments, they get filled really fast. We have on-site staff members who are constantly doing marketing around the area on various platforms online as well, and through which we try to get renters. Um, I think we're very make sure that our collection we are we're able to collect the rent in a timely fashion. If there is any if there are people who are not paying, they are reached out to. So our managers are very particular about that. Um, I think we've also, I think our process allows us to make sure that we actually get really good renters as well. So we have our have a very strict criteria about who we allow to rent in our assets. And fortunately, I mean, of course, there are situations in which you will, uh, get something that you're not expecting or have issues and circumstances. But mostly, we're able to get renters who are able to pay, have a job, have a family, and stay long term because that's what you would like. Okay, so I think we still have about 11 minutes to go, but if nobody has any further questions, I think we would like to close the conversation here. But yes, if you have any specific questions, if you want to reach out to any of us, you can just text or schedule a call with us. But thank you for taking our time this evening. I know it's midweek, and everybody's really tired. So enjoy your evening with your family, and we'll see you in about 4 weeks for our next webinar series. Take care.